Hey guys, welcome back to my channel. My name is Joe. Today is April the 6th. In my journey to 250k, I'm currently at 141,845, up by about 0.9% for the day, which is about 1,300. For the week, up by about 10%, which is about 13,500. For the month, up by about 7%, which is about 9,000. 3 months, down by about 7%, which is about 11,000. For the last year, up by about 56%. Which is about 51,000. So in this journey, we will be talking about a lot of stocks that I'm in, as well as in a few weeks I'll be introducing to some of some plays which I don't hold but I've been looking at and planning to take some position in. I think we should be able to get close to our target for 250k at the end of the year, or even go past it. I usually have a lot of option plays running. I just sold in the morning Nike call for some 25% profit. I think if you have some discipline in when to sell your options or what time to take some losses, you should be relatively on the up even when we're in the red days. But yeah, let's talk about this penny stock that we covered a while back, CTRM, Castor Maritime. So currently it's at 0.57, ticker symbol CTRM. You can see for the day is down by about 0.9%. For the week, down by about 26.5%. For the month, down by about 35%. 3 months, up by about 208%. And for last year, up by about 3.51%. We have a lot of volume in this stock. It's a penny stock, but also we had some news, I believe yesterday, that made this stock get traded a lot. You can see I still have the 750 shares. Average cost is 0.36, and it's up by about 56%. One thing about penny stocks, no matter how high convicted you are, I usually say it shouldn't even take more than 1% of your portfolio, depending on your portfolio size. So I have this at 0.3%. So if it tanks even by 50%, I'll still be okay, because it has really a small percentage in my portfolio. So just a quick reminder, it's just for entertainment purposes only. Always do your own due diligence. Penny stocks, for that matter, are very volatile and very risky, so make sure you weigh in your risks accordingly. And also, we're growing this channel real fast. Subscribe to the channel if you're new. Turn on the notification bell if you want to support the channel. We have several links down below for some incentives you'll get if you open accounts with SoFi, Webull, as well as Robinhood. But let's talk about this company a little bit. We know they're buying a lot of ships lately, and once things are starting to get back to normal, we expect trade to resume a little bit normal, and then we should be seeing a lot of volume in terms of commerce happening. And we hope that this company will benefit for those who are holding a long term. But if you see a very sharp movement to the downside, I'll advise you always have a trailing stop loss, or you be able to secure profits early so that you don't get to bag hold. And always don't get into penny stocks when they're going up and up. The best time to do or get in is when they're going down. So don't misconstrue those two. If the stock is going way up, just don't chase it. If it drops tremendously, you do your DD and see there's some opportunity, then that's kind of the best time to get in. Then you have few options. If you're bought high, you can sell off completely or take the loss, or you can average down. It depends with what's your strategy and your end game. But let's look at this article. I think it touched a little bit about what happened yesterday. So it's dated yesterday. So Castor Maritime is currently down by about 23% to a price of 0.58. Monday, the stock has been traded at a volume of 120 million, about 161% of its recent 30-day moving average. So why was it moving? Breaking news service shows some insight into what affecting the shares. Castor Maritime shares are trading lower after the company priced its 125 million registered direct offerings at 0.65 per share. So that was lower than what the price was, I believe, yesterday. So technically, it had to drop the price real bad, and that's why a lot of people started transacting it, because it was having some really volatile movements, so people can get in to the downside and to the upside and trade in with a lot of volume because they're super cheap. Most of these companies right now, they're doing this whereby they have a lot of share offerings, and I don't blame them. They have to do what they have to do, but when you see a company continuously doing this, you probably put it in your list of companies you need to chop off, even if they run up, because at the end of the day, you don't want a company just doing whatever they want to do and kind of messing with your with your investment strategies. So this is one of the companies which I have a plan to kind of sell off in the couple of months coming. As soon as it gets to a certain point I feel comfortable, I'll probably get out of it or just leave maybe 250 shares on the table and sell the rest. But yeah, that's kind of what I had for you today. Be green, be safe. See you next one. Bye.